Good morning, traders, and welcome to BCR's morning market outlook. Let's take a quick look at the latest movements across key markets and the factors shaping them. First up, let's have a look at the US dollar. The DXY slid towards 97.6 this morning, edging near a 1 month low. Traders are holding back ahead of a heavy week of US labor market data, from job openings to Friday's non-farm payrolls. Last week's PCE inflation print confirmed price pressure remains sticky, but it hasn't really shaken expectations of a Fed cut in September. Markets are pricing in close to a 88% chance of a 25 basis point reduction. One headline to watch is that a federal appeals court ruled most of Trump's tariffs illegal, setting up a potential Supreme Court fight by mid-October. With US markets closed today for Labor Day, we could see quite a trading. Technically, the dollar remains under pressure, with support sitting around the July lows of 97.11 and 97. Next up, let's have a look at WTI crude oil, which is back around 64.40 after bouncing off of earlier weakness. The Russia-Ukraine conflict remains a supply risk. Kyiv has pledged more strikes on Russian territory. At the same time, traders are weighing whether India will bow to the US pressure to curb Russian oil imports. OPEC also meets later this week, with production policy likely to be the key driver. The chart shows oil stuck between support at 61.45 and resistance near 65.76. Momentum indicators are flat, suggesting a tug of war is continuing unless we get a catalyst, either from geopolitics or OPEC, which might tip the balance. Next up, let's have a look at gold. Gold is trading near 34.76 an ounce after briefly touching 34.90, its highest in 4 months. A softer dollar, Fed cut bets, and safe haven demand have all lifted the precious metal. August alone saw gold gain nearly 5%, and with tariffs, geopolitics, and US jobs data in play, the safe haven bid remains strong. Technically, the 3400 level looks like solid support, while 3490, 3500 is the ceiling everyone is watching. A decisive break above these levels could possibly open the door to fresh highs. Lastly, let's have a look at the Australian dollar, which is holding firm around 65.50, supported by a weaker US dollar and rate cut expectations. Data from China over the weekend showed another soft manufacturing PMI at 49.4, which tempers optimism for Australia's biggest trading partner. Even though Australian dollar is still holding above its trendline support and short-term averages. On the upside, last month's high at 65.68 and July's peak at 66.25 are the next hurdles to look for. Well, we've started the week with the US dollar on the back foot, gold shining on Fed cut bets, oil caught between supply shocks and demand concerns, and the Australian dollar benefiting from the US dollar softness. The real catalysts arrive later this week with the US jobs data and the OPEC meeting. Until then, markets may stay range bound but on the edge. That's all for today's morning market analysis. As always, manage your risk and happy trading.